Why 24/7 digital markets will power development in frontier economies. Tokenization will create a new financial order for U.S.-led reconstruction, says Davis Richardson. Goodbye to vague notions of soft power and impact investing. Hello to benchmarking, concrete KPIs, and sovereign capital deployed with precision. In the 20th century, Bretton Woods and the Marshall Plan set the financial blueprint for post-war recovery. While the stakes today are just as high, the tools are different. From Ukraine to sub-Saharan Africa, frontier markets are fighting for financial credibility in a trust-scarce world. Traditional aid models, plagued by opacity and inefficiency, have been further dismantled by the Trump administration's DOGE initiative, which is moving to replace aid with measurable, tech-enabled delivery systems. Tokenization is the inevitable endgame. BlackRock's iShares Bitcoin Trust, IBIT, with over $14 billion in inflows and nearly $200 million in annual fee revenue, has become not only a standout among new ETFs but a symbol of shifting institutional risk tolerance. Its meteoric rise demonstrates growing acceptance of digital assets as a standalone investment class, particularly among institutional investors once wary of volatility. As mainstream allocators embrace digital assets through regulated vehicles like IBIT, capital markets are beginning to reflect a broader appetite for asymmetric upside, an investment profile long associated with frontier economies. Frontier markets, characterized by political uncertainty, thin liquidity, and underdeveloped financial infrastructure, have historically struggled to attract stable foreign direct investment. But the institutional normalization of Bitcoin and other decentralized assets is paving new pathways for capital to reach these regions. Just as ETFs like IBIT have created a regulated bridge into crypto, new financial structures, tokenized infrastructure, auditable capital flows, and blockchain-based land registries are likely to do the same for frontier development. The same investors pouring billions into Bitcoin ETFs may soon view frontier economies not as exotic risk, but as parallel vehicles for exponential returns, particularly when paired with digital rails designed with transparency and scalability in mind. At the root of every successful logistics or capital deployment strategy lies a surprisingly mundane concept: data entry. Every bottle of clean water, every corrugated roof panel, every bolt of fabric destined for refugee housing must be recorded, reconciled, and reported. Today, this is done manually across dozens of silos: UN spreadsheets, NGO CRMs, local government PDFs. But tokenizing these entries, embedding them in smart contracts, linking them to geolocation, timestamp, and vendor profiles creates a live ledger of aid in motion. This new approach towards accountability will enable not just transparent procurement but tokenized local liquidity. Local entrepreneurs paid in stablecoin, verified vendors rewarded with smart grants, or veteran-owned Ukrainian firms given tradable carbon or aid credits. Tokenization allows physical goods, services, and contractual obligations to be represented as digital assets on immutable ledgers. In practice, this means a water pump in Sumy or a shipment of medical supplies in Sudan can be tracked, verified, and paid for in real time without bureaucratic drag or trust deficits. A properly structured token ecosystem creates global, auditable, and real-time liquidity for critical development resources, a 24/7 commodity market for gravel, steel, solar panels, or cement in post-conflict zones. Global commodity markets are not built for the rhythms of frontier states. Most development needs, timber, power tools, clean water filtration, are transacted through arcane, manually priced channels. This invites corruption, delays, and cost overruns. Tokenized markets enable round-the-clock pricing, liquidity, and settlement. A contractor rebuilding schools in South Sudan can lock in tomorrow's price for sheet metal with a click. A regional bank in Tbilisi can see in real time whether a food distribution contract has been fulfilled. Governments can collateralize transparent delivery records instead of hoping donors believe their paperwork. As China floods the global south with opaque lending and Russia bankrolls destabilization, the U.S. needs a private sector-led, transparency-first development model. Tokenized systems provide built-in auditability, modular integration, and sovereign-aligned incentives. And they align with the State Department's mandate toward outcomes-based aid rather than a carte blanche check which too long defined U.S. foreign policy. Through our work at AUSB, we've seen firsthand that frontier markets are starving for trust, coordination, and clarity. Tokenization is not the starting point in these spaces, nor should it be, but it will be the final endpoint. In the interim, best practices for data entry to ensure that life-saving resources go towards their intended use is the priority. These logs will contain valuable data sets for reconstruction while laying the foundation for 24/7 frontier markets. What Bretton Woods did with pen and paper, tokenization will do with code, create a new financial order for U.S.-led reconstruction. Davis Richardson serves as interim chairman of America-Ukraine Strategic Partners AUSP, a global development firm founded by a team of former intelligence officials and BlackRock alumni and managing partner of Paradox Public Relations, a boutique communications agency headquartered in New York with clients in quantum computing, defense technology, and blockchain.